So everyone, welcome back to another Lumley Trading live stream. In today's live stream, we're going to be doing our stock watch list, the main stocks we're looking at coming into the week, probably Monday, Tuesday, potential trades. If markets continue to sell off or they start to pop, obviously, there may be some stocks added to the watch list during the week, but the ones we go through are the ones that we're really looking at come open on Monday. So, to get kind of straight into it, the first one on our watch list is going to be Pfizer, ticker PFE. And also do check the description if you want to kind of see our watch list. I'm going to start posting them out in the weekly newsletter. So if you want to join that weekly newsletter, you can either go to, I think it's just stated as newsletter, or you can go to my website and it's under the resources tab. So Pfizer is the first one on watch. Now, why is that on watch? So it is currently pulling back, as we can kind of see. It's just been getting more into a channel, getting a slower kind of lower highs, higher lows, all that kind of stuff. Looks more likely like it's going to break to the downside. However, obviously, as of right now, it could still bounce. It's on this kind of sort of support as of right now. But if we're able to break this, continue down, definitely interested in the push firstly down to $45.75, because that would take us to that first deviation on the 4 hour. However, we're not quite yet at that 45-week low, the 52-week low, and considering the overall markets are starting to sell off, looks like they're going to continue, especially after Jay Powell's speech saying households will hurt, and obviously whenever you hear that, the economy is going to hurt, and really we would, on that statement alone, expect prices to most likely carry on falling. However, as the analysis we do on the channel is more technical focused, we will be using the standard deviation channels to find our buy and sell levels. But also, you always want to be looking at your own fundamental analysis, because obviously, if you're shorting something that does well when markets are going up, has a strong maybe beta or increased beta to the overall market, then if on a fundamental basis markets are most likely going to continue up, then obviously you stay away from the short. So definitely know the fundamentals and don't trade strictly off technicals. It's just technicals is how we find, at least personally I do, find my buy and sell levels, but I want to be knowing more than likely where the market is going to be heading from the fundamental standing. Where do you find this fundamental standing? Usually you can just find this really watching Bloomberg TV, you'll hear stuff coming through, but the main ones is always going to be when the Fed is speaking, mainly Jerome Powell, and so definitely be listening to those calls and kind of meetings. Now anyway, the key level I'm focusing more on Pfizer is if we can continue pushing out to around 44 again, not at our 52-week low, but we are going to be down at this gap fill, and when we come into gap fills we do expect pushes. Or a kind of reversal of some sorts. Doesn't mean it's going to reverse fully, but we do expect some sort of buying pressure to kick in. Also at that second deviation, so good sign that we should start increasing in price. Now, if we do continue down lower, note that around the same level actually as well, we do have the gap fill over here around $44, $43. But the main focus as well is if we can continue down even further, we do have our next support at $42.50 and then $40. Now this, if we can push down to $40, this is going to be a key buy level. Not only is it going to be a big kind of psychological level being at $40, but it is going to be at our 52-week low. And so we could just kind of see buying pressure kick in coming into these levels. If we do continue down lower, though, we do have buy targets at $39.50 and final ones at $36 and $36.50. So there's going to be the buy side of Pfizer if we continue down. Now, what are going to be our targets if we start getting long relatively soon? So usually with these kind of trades, our kind of final target, or where we want to get out the bulk of our trade, is usually to statistical mean, which in this case is going to be around $48. Now, why do we want to be locking in profits coming into this statistical mean? Well, the way I trade is off these standard deviation channels. It is a mean reversion strategy. So we're trying to lock in profits as we reverse to that mean. What's up, Ben? Weirdly enough, actually, Right Aid is your baby. This is on the watch list. We will go over it next because you're here. But on Pfizer anyway, the key kind of target if we're buying this long is going to be to the $48. If you're looking to hold that through that level though and continue holding, then we're going to be around the 52 to 52.50, first deviation and statistical mean. And then as we continue up, we're going to be looking at $55, $56.50, $58.25, $60, and then really past there, we'll have a new analysis video or stream about it. Now, Ben, talking about the Rite Aid, fundamentally worth around 1.8 to 2.4 billion easy. Yeah, Rite Aid as well. I thought it was a great company. No longer live in the States when I did. I mean, on par with Walgreens, and yeah, I mean, from an experience, it was always good. Going through their balance sheet, they seem all right. I mean, you know, when they're down at the $4, definitely a bit oversold. But that's why it's on the watch list, because as of right now, we did have this momentum pump, and it was something I was shorting going into it. Even though it is a stock I like, and I will invest in it. Do I play options on the larger blue chip plays like PFE? Yes, that is mainly how I trade. The majority of my trades, at least in this kind of market, are all done through options. Mainly debit spreads, the occasional just being long, either a call or put. The majority right now are kind of playing debit spread trades, just because then we can kind of lock in profits while having a defined risk, which is something I don't want to be stuck in these gaps, you know, overnight. Sometimes, I mean, Rite Aid, I think we had a move of about 5-6% overnight. Don't want to be holding that with shares. Biggest problem is the board. Yeah, definitely, I understand that. I honestly believe Rite Aid is being a bit of a potential buyer. Yeah, I could definitely see it getting bought out. I mean, I think it could be quite good if a PE firm comes in, maybe takes them private, kind of just makes them function a bit better, and then re-IPO. I think that could be a good time for Rite Aid if we do that. But either way, we did do analysis on it a while back. I mean earlier this week. I think it was Thursday. And we did say, obviously, when it was at the $10, $11, it's something I was looking to short and did personally short. But as it came down, locked in profits around the $8, $9. And as we continued down, we broke through these support levels at 875, 825. And we said, really, we do expect a continuation down, but we do want to see the retest. And that's what we're seeing now. We have retested this 830. So if we do continue down, really we're going to be looking for a target of around 575. And then really it is becoming into a good buy opportunity. Obviously, we're not at that 52-week low, but definitely a good buying opportunity nonetheless. And something I may buy on both the trading and the investment account and start doing some more covered calls on them. Gotcha. Love your channel. Watching from Georgia, USA. Never been. I wouldn't mind going there. It's always looking. That's what I'm looking for. A PE buyer or a tender offer. Yeah, I could definitely see it happening as well. I think it would be quite good. Made awesome games from 5 to 11.50 on the Jan 23 calls. Great to hear. Great to hear. Yeah, Rite Aid was one. I don't know why I didn't play it long. My alerts were always going off. If you have been on the channel for a while, we do actually analyse it. The Rite Aid and the Walgreens are stocks I do watch quite regularly. I quite like the stocks. But for some reason, yeah, I didn't actually trade it long. So when we do come back down to those levels, definitely looking to get some calls. And definitely looking just to buy shares and sell some covered calls as well. Should have bought 100 of them, not 20. Yeah, I mean, it's good to have trades like that, though, where you wish you bought more than having trades where you wish you didn't take it at all. But yeah, really, so the key focus, at least for me, on Rite Aid is I do think we're going to continue down. We're kind of retesting this 830, 875 level. Continue down, and then I'll be looking for a target around 575, and that's where I'm personally going to be looking to buy up. Random question, what's your opinion on oil? Well, as you're here, we can quickly pull up the oil futures. So, obviously, we're starting to sell off, definitely back from the 120. And oil is one of these things, I don't really pay too much attention to it until it's pumping high. And what you'll see here is I've got a resistance line at 120. Really, that's my main time I focus on oil. Once we're hitting above the 120, 9 times out of 10, really, it just pulls back and relatively quickly. I mean, if we change this to, you know, a max time frame, really, whenever we come down to this 120, even here, we broke through to 150, but very quickly pulled back below. These times we came back or tried to test it near 120 quite often, but failed. And even this time we broke it, pulled back, tested it one more and failed. That's why it's one of those things. Oil, if it's 120, it's the main focus because then it's something I'm looking to short. But yeah, on oil, as we're kind of putting back now, not something I would really be looking to buy or sell. It's just not in a great level, I don't think, to really be buying. If we can push maybe down to the $70 level, something then I'd be more interested in buying. And the problem I'm having with oil at the moment is a lot of the stocks aren't really trading with the futures. So we can see this is the crude oil futures. We then go over to something like ExxonMobil. It's pushing near its 52-week highs, which isn't something I really like to see because it means I can't really trade the stock version of it because I don't personally trade futures. So I'll be trading as a stock alternative. And last time we came to 120, I traded it through Exxon, but you can see Exxon is pushing higher than the actual futures, which is something is a bit deterring to see. But definitely as well, if you're paying attention to oil, well, this is more natural gas, but KOD and I always forget what the other one is. I've got it over here. KOD and is it SOXL? I don't even know what it is now. And Boyle, sorry. So these are the triple leveraged natural gas, and natural gas is something I would be more interested in at the moment because natural gas is really popping. I mean, if we go over to the futures on natural gas, let me just pull this up. Where is it? No, /NG, I could have just typed it. But we can see, yeah, natural gas near 52-week highs. So this would be my main focus. Oil, there may be some potential plays, but I like going for the simplest and easiest ones to trade. And natural gas is one of these. Even if you think natural gas is going to go higher, we would expect to pull back. I mean, you saw it on oil. You even saw it on here. It comes to these 52-week highs, and you expect some sort of a pullback. And this is when I try and play this off the ETFs, off the triple leverage. So you can see Boyle is the bullish version, but you can go to KOLD, get the inverse of it, and really we're pushing down to these 52-week lows, as you can see. Not if it can push down to $9 again, the $8.50, even $8. Something I'm just looking to buy in shares and just try and catch the pullback or even reversal of natural gas. Let me catch the rest of yours. Roger that. Thanks for your insight. No problem. What's your insight in oil? I would like to know as well. Yeah, there's large arbitrage. Yeah, of course. My bet is MBS is about to cut production big time. Yeah, it's one of those things. Oh wait, what is a good 3x leverage for natural gas? Oh, the literally just ones I went over. So KOLD, that is the short. So triple leverage short of natural gas, and then you can go over to Boyle, which is the triple leveraged bullish natural gas. So that is what you can be looking at. And yeah, the only thing I would say is I have tried trading options on these, but they just the spreads get very wide. It's hard to trade with options. So if you're looking to trade it, see if you can get some tight spreads. But I just had a lot of problems trying to trade Boyle and KOLD with options. So it's something now I'm looking to trade more with shares. Just because the options were a bit on the tough side to be trading. Anyway, if you want me to check out anything else, you got any recommendation, Ben, let me know. Otherwise, I'll get through the rest of the watch list on what I'm personally looking for coming into the week. Thanks, mate. You're the best. Thanks. Love to hear it. And thanks for the support being in here. And yeah, so if we continue to pull down, DLTR, where it is right now, definitely can be somewhat of a good buying opportunity. They have reduced expectations, so that's why they're pulling back. But really, if we can pull down to this kind of 130 area, we're going to be hitting the third deviation on the 4-hour, daily second deviation. Fundamentally, the stock is quite strong, so definitely something that I'd be looking at. So yeah, if we can push down to around 130 on Dollar Tree General, definitely a key focus that I'll be looking at. Already opened up some just long calls but in small size because I want it to actually pull back further, but just didn't want to miss it in case we get a bounce now. You want to see SoFi? Let me pull that up. We did do an analysis on this last week, and it was one of these stocks. in its own right now, fundamentally, a lot of people believe it's quite cheap. From a technical standpoint, we're not really at great buy zones. If we continue down, obviously the 42-week low, the 428, the 425, and kind of the $4, these will be the key levels that we're looking at to kind of buy. Right now, yes, if you kind of like SoFi as a stock, I mean, $6 quite cheap. What would targets be though if you are long? So the closest target's going to be $7.50 with a push to $9. And these would kind of be the ones if you're looking to, short day trade, or short term swing. Those would be kind of the key focus I would have. If it does continue up though, then we would be looking at $10.60, $13.75, and $14. Really, if it pushed past here, we would do analysis on it, because then it's definitely going to be having some strong momentum. A year ago, I was sitting in the GP's office waiting for it to go to 90. Nice. Love lo-fi, but I want to see it retest that 480 support. Yeah, that's the kind of thing. Yeah, with SoFi, I haven't really done a deep dive in their fundamental. I haven't gone through their balance sheets or anything like that. So when I'm looking at SoFi, I'm more just looking at it technical only. What is that? Party PE ratio of 1.8. Forward cash flow of 150 million. Is this a buy? PRTY, we did do analysis on this recently. Again, I haven't personally gone through their fundamentals, because yes, on this channel we do a lot of technical analysis on these small caps, and that's just because they're very easily to kind of technical based, because they're not really moving on fundamentals, the ones a lot of people are looking at, because they're usually getting pumped in something like Wall Street bets. So really you can just go off the technicals. But I personally focus and trade large cap stocks, usually using options. So when we're doing analysis on this, like the PRTY, I can do your analysis on it, but do just take into account when I'm looking at it, I'm doing it off a technical standpoint only, because I do not know their fundamentals. I'm in 1,000 shares at 191. So yeah, so this is the problem I have with PRTY if you're kind of long now, and it's kind of just my opinion, but obviously we were down by $1 for quite a while. Between the $1.50, it was kind of just bouncing between these ranges. You saw a lot more traction if you use, I don't know what the site's called, I think it's like Ape something, and you can go and see the traffic and the increases of talk on Wall Street bets. And this was one of them that really increased traction on Wall Street bets. And so it's more of just a kind of a pump, in my opinion, pushing up to these kind of levels. So really, even if you're buying it or you have it long above 150 on a technical standpoint, seems quite risky as of now. And my main kind of focus would be seeing it pull back to kind of the $1.25, $1 area to be looking to get it long, because I imagine it will pull back. It seems more like a pump. We came into its solid resistance on the first deviation. It's coming to this resistance. Doesn't look like the pump's continuing, at least for now. So we would kind of just expect it to keep pulling back for the time being. With such a bad day on Friday, do you think Monday will be affected as well? Yeah, of course. Every time you see these kind of days, you tend to see more volume coming into the day. Can't say whether it'll be bullish or bearish. A lot of the times, though, you tend to see in the mornings as markets open, you'll see a lot of buying pressure, but that doesn't always continue throughout the day. So just watch out for tomorrow. If you're especially day trading, direction can change quickly, and if you don't normally have a market chart, meaning an S&P 500 or even a Nasdaq, maybe have one of those up on your charts, because it can change quickly on days like that. Yeah, I'm looking for either a dollar retest or a slow rise into November. Yeah, it'll be interesting to see how it is. Throw caution to the wind. Yeah, definitely. I mean, something you can do as well. You've got a few winning trades, and you have quite a lot of leftover profit. Sometimes I even go to plays a bit more risky, not as much caution, but still defined risk. That's one of the things. I'm quite a conservative trader. I always like to find risk, or at least know how much risk I'm in with. Now, Docusign, another one that went off on the alerts. As of recent, you can see where their earnings are quite clearly, because they keep doing quite big gaps between these earnings. But their earnings seem to keep getting near to getting filled. And as we're kind of pulling back, when we're putting into this 52-week low, Something I'll maybe be looking to buy around this $48-50 area, because I could definitely see a push, even if it's just like a push to 55, maybe even $60. Quite easy, I think, quite possible, and that would be quite big. I mean, yeah, if we're getting in at say $49, a push to say $60, we could be making 10%, and I think it'll be a relatively easy-ish trade to do. So the alerts are out, and I don't know why it's not actually on, so I will be setting a new alert because I want to be notified if we're coming down to this level. Now, what was that? I did some on the ground due diligence, and the stores were packed. That's really good to hear. Party City, don't know if I got this back in the UK, so can't really check. But yeah, good to see. I mean, that's one of the key things as well. I mean, it's like the Rite Aid one. Whenever you're in there, they tend to be quite packed, so you usually know they're going to be quite good. I mean, it's like even investing. If you don't really know what to buy, you don't want to buy the indexes, just buy what you shop at, like Target, whatever it is, Walmart, Best Buy. They tend to do quite solid, because if you're shopping in there, most people are shopping in there, earnings will stay strong. What platform am I using? So all the analysis videos, mostly every video I record is done on Thinkorswim. However, you will see if we go through any trade recaps, the majority of my trades are executed through Tastyworks, because like I said, I mainly trade options, and the option system is better on Tastyworks. So Walgreens is the next one on my watch list. Pushed Friday, we hit that 52-week low like a lot of stocks kind of did as we're pulling back. And really the key focus is at $35, we're hitting that first deviation on the daily. We're going to be at 52-week low. Definitely something I'm interested in. Moving quite similar to Rite Aid, because obviously they do have quite similar business plans or business models. But yeah, when we come down to around $35, Rite Aid definitely, not Rite Aid, sorry, Walgreens definitely something I'm looking to get long. For investing, I use Peter Lynch method. That's nice. For me, investing, as I'm on the younger side, I don't tend to do a ton of investing. A lot of it I just try and reinvest into the trading. But I tend to just be surprisingly more of just an index guy. A lot of it I just throw in the index, just dollar cost average, and leave it there. I'm not trying to outperform the market. Most people fail doing that, and I'd rather be in the top performance side of things. It works better than any other strategy for me for investing. Well, that's all that matters. If it works for you, then that's great. And your 50% trades, 50% long investments. Yeah, it's cool. I'm probably 80-85% trades and 15 to 10%. 15 to 20% investments. But obviously, as I get older, move more into the investment side and reduce the trade side of things. You've got a great strategy, it seems. Thank you. Definitely. How old are you, mate? Just being curious. 21, Ben. 21. But yeah, with this strategy, I have been at it now for quite a long time. Got into the markets before COVID, and then the first year or two, all losing strategies, or just they work for a bit, start losing. This strategy, it always worked. As soon as I used it, it worked, and then over time, I just did testing. How can I improve it? One of the ways was kind of doing debit spreads, because you can't always judge when a move's going to change, but definitely can increase your win rate. I find it hard to believe people are buying into APE instead of AMC. Okay, we'll go over 3M, and then we'll go over to APE and AMC, because we can check out the charts on that. But yeah, 3M as well, another one key on watch. They just, I think it was earnings. Yeah, they just had earnings. Actually, no, they didn't just have earnings. I don't even know. I haven't really checked them recently. But either way, they did do a massive pullback yesterday. We can see 10%. I like the company quite fun, or just as a company. I mean, they're one of the best in what they do. So we kind of pushed down to 52-week low. Another one I'm looking to trade long. However, since really COVID, and it is to be expected, this stock hasn't been great. Has just been on a strong decline. But as well, we are coming into that second deviation on the 3-year chart around $125, and it's another reason why I got to keep focus on it. So that's it for 3M. Let me check out AMC and 8. For AMC, again, not one of the stocks I really trade or invest in. I don't really like playing these kind of pumpy stocks, Wall Street bet stocks, because they will shoot up for ages, but once people start locking in profits, or once any big news comes out, they can crash very quickly. And like everything in stocks, and this is a perfect example, things go up a lot slower than they fall. And so that's just one of the things with AMC. But really with AMC, kind of expect it to keep continuing down to around $8 at least. Then we could see a bounce, and that would be kind of my main focus, getting a bounce play maybe at $8. And could see a push to around $18. That would be the first deviation on the 4 hour. Would be the gap fill, and very close to that first deviation on the daily. So could see it pushing back to 18. Maybe not all that soon, but could definitely see it pushing back to that level. Shorting AMC and going long ape. Mean version strategy is what you're using with credit debit. Yeah, so basically the strategy, I mean, I've got them on my channel. I did a run, I think, a week or two ago, and that went through all the strategy itself and the execution methods I pick and when I choose them, how I use them, and basically the whole strategy I use. But the strategy is always on a technical side of things. If it's at the first deviation, I don't tend to trade it. If we're at the second or third, really I'm then just looking to get long bias. And if it's at the second or third on the top side, looking to short. Whether I'm trading that with shares, options, really it's the same thing. If it's up here, I'm looking to short. If it's down here, I'm looking to buy. The only time I change the execution methods is depending on the overall market, on how it's moving. Back in COVID, when we were just very strong bull market, just keep pushing. That I'm buying with shares, or getting long calls. In this kind of market, very volatile, you don't know what's going to happen. Whatever Jerome Powell says has a massive effect on the market, especially now. So by buying it through debit spreads, or I don't really use credit spreads, but debit spreads, by doing it like that, you got defined risks, so no matter what news comes out, I know what I can lose, my max potential loss. Your short 3M, yeah, as I'm still waiting for it to pull back a bit more. Once it comes to 125, definitely something I'm looking to get long. The earplug lawsuit is huge here in USA. Is that from ticker EAR? Here you go. Otherwise, I'm not too familiar on the lawsuit. Oh, no, earplugs. Isn't that 3M? 3M is an awesome company, but oh yeah, no, sorry, I didn't even know about that earplug. Was that maybe why it was moving? Let me have a quick look. I don't know. I will look more into that. It's interesting you said that. I'll be looking into their earplug lawsuit. I hadn't actually really heard much about it, surprisingly. I guess 3M is not really talked about all that much, so you don't really see, or at least I don't really see too much news from it. I'm a former US Army soldier, and if soldiers are involved, the lawsuit will be in the billions. Yeah, I mean, really anything that is in the billions, but as well, thank you for your service. I totally agree, 18, damn. Yeah. So AMC, though, again, I always just like to say, I'm not personally ever trading AMC. Don't think I've even traded AMC in at least a year. Ape, we can quickly check out Ape as well. But at least on my strategy, I can't really trade stocks or don't tend to trade them all that much until they've at least been around for a year, because otherwise these deviation levels change quite quick and aren't all that strong. So unless I'm day trading, I tend to stay away from stocks that are recent IPOs or less than a year. But really with Ape, I think there's kind of a sign as well. You saw AMC fall, you're kind of seeing Ape fall. I think this is kind of a sign people will keep going to other stuff. Maybe they go back to Bed Bath & Beyond, maybe a GameStop, but I think their really focus from AMC is going to kind of fade a bit now because it's just been so diluted. I'm more into crypto myself. Crypto, not a thing I ever really got into. Since futures have launched, I do definitely check out like Bitcoin and Ethereum because they're the only ones really on here. And if I trade it as the ETF, so BITO, which is Bitcoin's ETF, may do the occasional trade on that. CME is looking to launch Ethereum options. Once they come out, then I will definitely be looking at it, because things like Ethereum, if they're coming down to very overbought levels or very oversold levels, I do debit spreads or even just get long a call or put. Definitely good potential in those kind of trades. So we'll continue down in the list. I think I actually skipped Ultra Beauty, but this one, you look at this chart, quite an easy one to trade. I'd be saying at the moment, very range bound. Once coming to $115 to $140, this stock is selling off quick. We've just seen it now. It's coming to this second deviation on the 4 hour and the daily. We're pulling back now. And again, very predictable trade. We did actually talk about this on a pre-market live stream earlier this week. Something I'm actually holding short right now. Main target of around $400, but I've already locked in some profits just because of how quick it fell. But yeah, I mean, a very easy trading range bound stock at the moment. So just definitely want to keep on the watch list if you like range bound stocks. I bought AMC at $8, 1,000 shares, sold most of it. Shares around 58. Oh, great trade then, Ben. Great trade. But I know after June 6th it was over. Yeah, great one there, Ben. It's one of those things. Yes, you can make a lot of money from them. I personally, I don't really touch them too much because I just don't want to get caught in a halt or something and it just crashed down. 3M we've already done. HPQ. So HP computers, if you HP, definitely one I'm looking to trade. Quite a long bias, coming down to around this $29 level. It's just hit its first deviation on the 4 hour. Expecting it to break. I want it to come down to that 52-week low, around $30. Again, debit spread and may even just take a few long calls on it as we continue down. Wouldn't be too bad as well if we could see a divergence. However, this stock doesn't divert all that much apart from really on this move here. Qualcomm, ticker QCOM. Put this on the watch list. You can see it's just not able to break this first deviation resistance on the 4 hour. We just kind of keep tapping it and just failing. So this is kind of on the watch list because really it's, if we can break above this 156, we can expect a breakout. I would imagine even past the second deviation, because if we do that, I think a lot of buying pressure will come in. We will continue at a minimum 164, but I could even see a push to around 180, and that would be really when I would look to take the potential play. I don't try and play the breakouts, I try and play the reversal. So if we pushed out to that 180, definitely looking at something I want to short. And again, I imagine soon we're going to push quite hard either to the upside or downside on this stock, and if we can push down to that kind of 110 level, Qualcomm, something I'm looking to take long. VRM, room chart please if you can, short. Let's go and check that out, what's happening on it. I think we did analysis on this when it did this move, it might have been. So VRM, again, like I said, I don't trade these stocks, I don't know the fundamentals, I trade them only off technicals. And the technical chart, problem with these kind of stocks is you can see obviously it sold off from somewhere around $28 down to $1. Problem, at least with my strategy with this, is I trade with standard deviation channels, and these channels get very wide when stocks sell off that much, that it makes it very hard to kind of have push to these zones, because you can see the first deviation alone is at $2.35 and $3.80. You know, that requires a near enough 100% boost from where we are now to come into that first deviation on the daily. If we want to come into that second deviation, well, on the 4 hour it's only $5, but on that daily it's $12, and that's the problem I have with these stocks, is they're kind of hard to trade, at least off my strategy. But on VRM, if you kind of just want some levels, as of right now, we kind of maybe forming a pennant is what it looks like. If we push up, be looking at 135, and that's kind of where I'd be looking to get out, because more likely they're not going to pull back from there. If we are able to break it though, then I would have a target of 380. And if we start pulling back, what's going to be the main focus? Seeing if there's any gap fills, but doesn't really seem to be any. Or we would also have a target of 250 then for that gap fill and psychological level. But really there's no gap fills on the downside for VRM, which can be good indication if you're holding it long, because then we don't always expect it to continue pulling back. Usually if you see a gap fill, if you see downward momentum, you expect it to kind of fill that gap. But in this case, really, VRM, focusing on the upside target, if you're holding long, these would be our targets. Don't really have anything to say to the downside. Obviously, the 52-week low, $1 key psychological resistance. And yeah, 52-week low would be definitely a key support. Honestly, the best trade I ever took like 140 days to play out, but it was street trade. Sounds like it. I think the best trade I ever got was actually on Rite Aid. Bought long some calls and I had quite a lot of them, and I think I held through earnings. I didn't realise their earnings were coming up, and they made 700%. It was that was probably my best trade. I think that happened during COVID time. Can't wait to see what happens tomorrow morning. Have a great night. Whatever, right? Buy some XRP. Again, don't really touch crypto. And XRP, I hear every person on the street, or not every person on the street, but even my degree, for example. So right now I'm at university, actually trading, financial trading. And a lot of the people who I can kind of tell don't know what they're talking about. They're all saying XRP to the moon. As soon as I hear that, I don't really like it. But again, I don't really buy crypto. I had a Binance account. Don't think I've logged into it for about a year. So unless they're in futures or an ETF of it, I probably won't be touching it. Just running, where's a good place to accumulate a little more in my position? Yeah, probably blood red. May the market gods be with us. Futures down 250. Yeah, futures. Yeah, like I said, I think it will either be we'll get a strong pop in the morning, continue down, or it will just be a slow grind down tomorrow. I imagine would be it. What stock did you want me to check over? Was that VRM? You just wanted to say where did you want to accumulate more? I'm guessing that's what you were still talking about. If not, let me know. So on VRM, if you were looking to buy more, I would be looking at that 150, I guess. With these penny stocks, really the key thing, at least that I used when I used to trade them, was psychological levels. I mean, they were always the key ones. You know, you got the $1, the $1.50, $2, $2.50, $3, so on. They tend to be key levels. I mean, even if you just look on VRM, you look at the $2, you look at the $1, and you look at the $1.50. If we mark these off, you will see what happens around these levels. You'll usually see sharp movements happen around them, and that's why I tend to focus on the psychological levels, and you'll hear that in all the analysis videos. So you'll see the first time we kind of came down to this $2 level, bit of buying pressure came down, sunk, came for that retest, sunk through it again, and again we halted here for a few days before being able to break through, and then a strong push down to that $1, but we can't break it. And again, the same thing coming into the $2. So really just, I would be looking at the psychological levels. You were looking at the 130. Yeah, again, another key support. If you break down, you're trying to wait that bit longer. 130, another great level, really. And even the 115 could be quite good. But yeah, Ben, let me know if there's any other stocks. John, I'm guessing you were heading out by what you said. But if not, let me know if there's anything else you guys want checked out. Rite Aid, already went through it. Again, expecting this retap, which we've already done. And now I'm expecting a slowish grind down to around 575, which is where I will personally be looking to take it long. Now, Tesla and Nvidia, always on the watch list because I know a lot of people are liking the stocks. They like trading them. Tesla, same kind of thing. We're getting stuck on this first deviation on the 4 hour. So really, we're expecting a large push either up or down. Usually that's not that predictable. That we just, if we come down to support and just crash through it, then we'll be looking for a push down to around 270 and 250. And on the same thing, if we start pushing to the upside on Tesla, I'll be looking at 337 to around 320. Nvidia, same kind of thing, kind of struggling on that first deviation resistance. And the main thing would be, can we break 195? If so, expect some hesitation around that $200 level, but we could see a push, quite a big push to around 220. And if we start pushing down, really be looking at that 52-week low on Nvidia, something we could definitely look to be trading long. Now, I probably will end the stream here. Like I said, I am back in the UK now, so it's near midnight. I haven't slept in 2 days, and I want to be ready for the markets tomorrow. So thanks, John, Ben, for all the comments, suggestions on stocks to analyse. My key watch list is on the left, so Pfizer, Dollar Tree General, Docusign, Walgreens, Ultra Beauty, 3M, HP, Q, Qualcomm, Rite Aid, Tesla, and Nvidia are the key stocks I personally got on. Watch. I had a friend tell me Bitcoin was a joke when it first came out, so I ignored it. Put a couple hundred in XP, you won't regret it. Well, if I ever go back into my Binance account, I remember that, John, and I'll throw some in. But anyway, thanks everyone for being here. I will catch you in the next stream. I'll probably do a pre-market stream tomorrow. If you want to catch me, I'll probably be around 20 minutes before market open. And we can see how the futures are moving and everything before markets open.